Hey guys, let's go over the VIX real quick. Just a short video. Another nice move, another nice call. I mean, we've traded this well all year and even into last year. Um, but this is definitely a longer term uptrend now in the VIX. So there's a lot changed. If you look at S&Ps, any of the US indices, I mean, forget Europe. European stocks are just a disaster. Um, Japan stocks also. Um, But when earlier in the year, right, when S&Ps were still making new highs and we were grinding higher, there was a lot of this the VIX was in a range between, I mean, we were getting some 10 handles on the VIX. So much tighter range. And you could still make some money on the long side. You just had to be a lot more patient. Okay, now that S&Ps have starting to make new lower lows, and the Russell also, I mean, the Russell's getting destroyed. And the lower highs, though, the lower highs, that puts the whole technical structure into a more bearish formation. So you would expect the VIX to also be making higher lows. And that's what we're getting. So if you look, this was the summer, right? These lows are much lower. These lower highs are very contained, okay? Now, look at the higher lows. We're slowly moving up here. All right. And then here was the most recent lower high. We're well above that. And now we're trading above here. So there's a good chance we can test these highs in the VIX. But the point being, I mean, we've come out of a lot of our longs from down here. It's been a nice trade. I only have a small last few lots on, or basically calls out of my call ratio back spread. And I'm going to leave that for the final push. Maybe you even break 26 if something, we still haven't really broken anything longer term for that to happen. So I'm going to probably just be getting flat if we get back to these levels. But the point being, guys, is that now that we make a higher high, you should expect a higher low. So don't expect a return to this type of vol. Even in here for September, we really didn't get below 12. So now I think we'll have a hard time even getting back below 15. It doesn't really matter. The point is that this is a new uptrend for volatility. So we can be a little bit more aggressive now buying on the next, So let me touch on UVXY real quick. So we've come out of our calls. We made nice gains there. And now we're going the other way on UVXY. And it's a patient play. We come out of the VIX first, and then we slowly roll into the short side of the put. So on the UVXY, I only play these leveraged inverse ETFs from the short side because of the decay, the roll, the VIX futures curve, yada yada yada. Okay, the last time we got short, it was a nice trade. Usually when you get short, and if we get that kind of collapse in the VIX, this thing can move all the way to new lower lows. That is definitely a possibility. That's why I like playing this thing so much. The last time we sold the highs, covered, I got flat on the lows. Okay, and now I said, as the VIX rallies, if and when it does, we're going to play this between 1 and 10 entries. So here's 1, 2, 3. This is my fourth, guys. So this is how when you learn to work a position, you can be really patient like this. But this seems like a big move when it's happening. And if you can be patient and get your average cost pretty close to the market, this is the move that happens much easier on this ETF. So I don't know what else I wanted to say on that. Today this is what's interesting. For those of you that are on my options team, and I do options seminars every few months. So if you're interested in doing that, just visit jenkinsrm.com. You can figure out, you can get in touch with me there. But the point being that the options guys, we understand this. So I did a put ratio back spreads here. I've been doing those on every time I want to buy puts. And what happened today is the last spreads I put on, I was long the 17s and then short the 20s. And I was short these at like 7 and maybe long these at like 5 or 6. But these 21 strikes were so out of the picture. I mean, here we're at 16, 17. And so I sold these 21 puts that were deep in the money. And then now we've come so far so fast that those 20 puts are out of the money, right? We're trading 2033. So those things have lost their value a lot quicker than these puts have, or just a lot more. So I was actually up on the day, even though I'm in a short position. And that's the beauty of the ratio put spreads that I teach. But overall, I mean, since we started this trade, we're out of the money. But that's not for long. We're going to work this thing. So again, this is our fourth entry, and we've got a lot more to go here. We'll see. If we go to 26 on the VIX, this is going to get really interesting. It's going to get really juicy. So I doubled my position today. I actually covered the short side of some of my calls and realized those gains. And you can see my delta. I forget what my delta was at that point. But I was essentially short 2,700 shares here for 1/10 the price. So if you went out and just shorted 2,000 shares at 16, what is that, 30 grand? Okay, I use these put back spreads. It's literally 1/10 the amount of capital outlay that's going outright short. It's one of the greatest option strategies around, and nobody really teaches it. So then I covered my short legs from here to here. So I made like 12 grand there between those calls that I just covered. And then I just I bought another round of put spreads that cost me 15K for another 2,000 shares. So normally 2,000 shares would have cost you, another 40 grand. And I realized 12, and I just doubled my position with another 15. It cost me $13,000 to put another 2,500 shares on. So my delta is 4,000 now, or actually, sorry, 5,000. And you can see it was 2,700. So I'm prepared to do this much higher, and we'll work this position. Anyway, guys, stay tuned for that. But the VIX is getting exciting, so stay tuned. Again, visit jenkinsrm.com if you want to learn more about us, the team, my company, and what we do. I'll talk to you guys in the morning.